Are we headed into a recession in 2024? Because did you guys see what Jerome Powell just said about interest rates, and especially what he plans to do in March?
You have to listen to this.
Yeah, you have to listen to it. You have to go back, see his, what he was talking about. He recently talked and he saw that, you know what? Last year they thought they were going to lower interest rates. They're going to start cutting rates starting March, and they were going to have roughly 6 interest rate cuts, or a couple of them this year. But now he recently came out and he said, take that back. I don't think anymore. I don't think it's likely anymore. Maybe we're going to push it for another 3 more months or whatever.
He pulled out.
Yeah, he pulled out, and he's saying never mind, and it's making the stock market kind of be confused. A lot of people are confused. They're like, why? What's going on? There's a lot of theories, a lot of conspiracy theories. Although it's fun to talk about conspiracy theories, let's be realistic. In my opinion, I believe why he said this is because he saw the numbers, he saw the data. There's a lot of companies that are coming out that are literally letting go people left to right. The commercial real estate crisis is a real thing. There's a lot of stuff going on, and not a lot of bad things going on. Elections coming up, so there's a lot of people that are divided left, right, people stuck in the middle. A lot of stuff that's going on. So he's probably thinking, I should probably hold on a little bit. People are still spending. The economy doesn't seem like it's too bad, so I think it could hold on, high interest rates for a little bit longer. I think he just sees the numbers and he's just like, you know what? Let's just hold off a little. And he's just playing in the background, sitting in the background, kind of let it all just play, and let's see what happens, basically.
Let's see what happens.
Yeah, that's basically what's going on right now. But the interesting thing is that there's this chart I want to show you guys here. So this chart is called the Federal Funds Effective Rate, whatever you want to call it. Basically, this shows interest rates and where they have been for the last, I don't know, almost 100 years, basically. We're right here in 2023, 2024. So just to give you guys some context and to explain it. So back in 2020, when COVID hit, interest rates went to zero. They went to zero for a good long time. Look at that. They went to zero for a really good long time. And because of that, what happened? People bought houses, people bought cars, businesses borrowed money. There was just so much money being printed and people spending. The economy was stimulated. That's why they printed out the stimulus checks. Why did they do it? Because of COVID. Now, it's never been all the way to zero, especially for that long. I mean, this shows that it's close to zero, but it's not exactly 0%. Right here was 0%. When you're thinking, what does that mean, Josh? That means that when you bought a house, you could have bought a house for 2 or 3% interest.
Really?
Yeah, because the Federal Reserve, when it says 0%, that means that they loan that money to banks at 0%, and then the banks loan that money to you at a low cost because it's low cost for them, so it'll be low cost for you.
So you're telling me that money was almost free for this period of time?
It was technically free, because if you're getting a loan for a house for 2 or 3%, and then inflation was like 10%, that money was free. Like in the sense where you didn't have to pay anything because you could have left your money in a savings account and it would have made more money. It was an interesting time to be in. But the problem now is that we're at a time where now they have to cut the rates because they've been high, and they went super high really fast. Each one of these gray shaded bars represents a recession. Back in 2008, they had their interest rates for a little while, and then they had to drop them, and that's when the recession started. So that's why a lot of people speculate the recession is coming, because historically speaking, every time there's a gray shaded box, and that's a recession, and that's when they start lowering the interest rates. As you guys can see, like in the 1970s, like for example, in the 1975 or ish, it looks like they lowered the interest rate and they saw that the recession started and they're like, let's raise it up again. Nothing happened, so they lowered it again. But still, it was still pretty high in comparison to where we are now. The norm is higher interest rates. We're not abnormal. The problem is we got used to the low interest rates. That's where we are, basically. What does that mean for you? What do you think about this when you see this?
Man, if you look at this chart, what do you think? You see it going up and down, up and down. So whatever comes up must go down, right? And we're at a pretty high place right now, Josh. So what do you think about that? If it goes down, do you think, just like we were talking about in other lessons, a recession's coming? Civil war? Something could happen, World War III? I mean, something has to happen, What is it?
You know what? You mentioned, wars. War could be the thing. Although it's ugly, it's terrible. Don't get me wrong. I'm not for wars at all. But unfortunately, wars have been used in the past to make that money. A lot of big companies that have a lot of interest in making money and pushing the economy to. Because the thing is, when we go to war, a lot of other countries, buy our weapons. They pay for different things basically, and it helps us also kind of like wipe out a lot of other debts.
And stimulates our economy.
Stimulates our economy. So for some people, they think war is a good thing. I don't think it's a good thing at all, ever. War is never a good thing. But I don't know, man. It's like, it could be a recession. Historically, the numbers don't lie. Every time they lower the interest rates, whenever it comes down, it's because they're like, oh, shoot. It's like they're almost like, oh, crap, like, we're late. Like, we got to lower their interest rates because recession just started.
And that affects everybody, including you.
Yeah, that's why we share what we share here at Avance News, because we know the things that we're sharing can directly affect you in so many different ways. And like I just shared, recession coming 2024. Well, let's look at this real quick. This bank, Deutsche Bank, just recently announced they're going to cut 3,500 people basically to reduce costs. Why are a lot of companies saying that? This is not the only one. Just 3 months ago, Citigroup announced a mass layoff 20,000 of their employees. That's a lot. Now, let's look at these right here. Layoffs.fyi basically shows tech companies and how many people they laid off. In 2022, 1,000 tech companies laid off 164,000 people in the whole year.
Wow.
So in 2023, 262,000 people were laid off. Now in 2024, so this is 100,000 increase, right? From this year to this year.
That's a lot of people.
This year, we're already at 30,000 people laid off, and it's only month one. So if you do that 30,000 times 12, that's 360,000. That's another 100,000 people losing a job increase. So it's a trend I'm seeing here.
The trend just keeps going up, man. People keep losing their jobs.
And I talked to a lot of people that, especially recent graduates in the tech field, and they cannot find a job. It's really hard out there to find a job. There's other, industries that are hard, but tech is they were hit hard this last year and this year. It looks like this year it's being hit hard. And also banking. Banking is getting hit really hard. Look at this. These two banks, these are big banks. And there's other banks that are announcing job cuts as well. So
yeah, those are a lot of people that are getting laid off just like that.
Yeah, and they have mortgages, they have cars. So, there's a snowball effect. People lose jobs, they might lose homes, they might lose their cars. There's a lot of things that could happen. Will it be 2008 again? I don't know. Every recession is different. So I would say no, it's not 2008 again. It's 2024 or 2025. I don't know when it's going to happen. So it's different, but it's good to be informed. If you're watching this, inform yourself. Stay ahead of the game. If you're at an industry where you can get risk of getting laid off, what should you do? If you know you might get fired, what are things you think they should do?
Prevent myself,
How would you prevent it? Like what are like 2 or 3 things that you would
look
do?
for other jobs, learn new skills, what's that word that I'm looking for? Adapt, you have to adapt to what's coming. All of these things, we give you this information so you can adapt yourself to the future. We were showing you this trend that a lot of people are losing their jobs in a certain area, in a certain field. And we're giving you this information so you can adapt to the next. Whereas like look for a new job, or learn new skills, adapt.
Yeah, adapt. I think that's the word that you can leave off with as we finish this video. Adapt to whatever's going on and you'll be in a good place. Don't worry. Even though all this stuff might sound negative, that's how you can change it around, by adapting. You'll be just fine. Comment down below, what do you guys think? Will recession hit 2024, 2025, or it'll just never hit, ever?
Will there be a war?
Civil War, just like that new movie that's coming out later this year in a couple months. Super interesting stuff. We'll see you in the next episode.
Take care.